Good morning, everyone. My name is Paul, and I am a nerd, and today we are talking about doing trust accounting with the trust module for Tabs3. Now, today we're going to talk about all sorts of interesting functions of trust accounting. We're going to talk about the client funds feature and tell you how it differs. We're going to talk about how trust integrates with Tabs3 when it should. We're going to talk about why in certain other instances it shouldn't, and why it's bad to use anything but the trust accounting module. Of course, there are many ways to do it. You could do it by hand, I suppose, and you wouldn't get the unwanted integration there, but you also wouldn't get any of the benefits of the integration or the reconciliation or all the great things that we're going to show you. But before we go into that, a little bit of preamble. I want to explain what this is. If you are still looking at this on your screen, it's because you have not pressed this little button that looks like an arrow pointing to the right that would cause that to slide out of the way. Press this button, this will slide out of the way. These buttons will remain, and this one will change into one that looks like arrows pointing to the left. Clicking that again would then cause this to come back onto your screen. So if this is covering up my screen and you're not able to see behind it, then you just want to click this button here and get it out of there. If you want to ask a question and you're feeling shy, you may want to use that button that looks like arrows pointing to the left to bring it back into focus so you can type a question here, and remember to hit the send button, and Leanne, our humble moderator, will interrupt me at the appropriate time and ask your question on your behalf. If you're not feeling shy and you want to ask a question, press this button here that looks like a hand with an arrow pointing upwards in front of it. That means raise your hand. If you raise your hand, Leanne will again interrupt me at the opportune time, but this time she will unmute you and let you ask your own question. Now remember, when you are unmuted, we are going to leave you unmuted until the question is done being answered. So feel free to continue asking questions that are follow-ups to your original question until I have answered it thoroughly. Same thing applies here. If you're feeling shy and you're typing a question, don't hesitate to continue to type more follow-up questions as I'm answering your original question, and just always remember to hit that send button, otherwise Leanne won't get your message. Now, without any further ado, let's go over here and take a look at the trust accounting system. Now, this is trust accounting right here. And in a nutshell, what it is a separate check writing and bank reconciliation system specifically for your IOLTA accounts, your trust accounts. And it can handle up to, well, actually I don't know if there is a limit anymore. There used to be a limit of 9 bank accounts. I think that's actually gone. But it can handle all the trust bank accounts that you have. Most firms will have 1. This system can handle as many as you may have. I have some clients with 3 or 4, and I have a couple clients with even more than 10. But most firms have 1 trust account. This writes the checks and does the reconciliation and prints all the reports necessary to manage that trust accounting. Now, what you're wondering then is, why don't I just use the accounts payable system and the general ledger that I already have? Why do I need a separate trust accounting system? Well, it's quite simple. The State Bar mandates that your trust account be totally separate from your regular bookkeeping system. In other words, you cannot show trust account information in your statements, your income statement or your balance sheet. Sometimes firms will come to us and they will already be using QuickBooks to do their check writing and also using it to do their trust accounting. And one of the things that QuickBooks does when you try to set up a separate checking account as a trust account is it incorporates that into your balance sheet, and that's a big, big no-no. Your trust account and all of the transactions and all of the individual balances that are maintained within that trust account should never cross paths with your regular accounting system. If you do, you may not be doing it, but it appears as if you are commingling funds, which is a big, big no-no. Now, we also have a feature in Tabs called Client Funds, and you'll see it here if you go into the Client Manager. You can put money into a client fund account. You can take money out of a client fund account and manage this separate fund balance through Tabs. Some people have attempted, and some have been successful at it. It's certainly not as functional as the trust accounting software. They have done their trust accounting here. Now, A couple problems: if you're integrating your Tabs system with your general ledger, then you have to be very, very careful how you set up the integration for any transactions that go into that fund area, because they, again, cannot be in your regular bookkeeping system, in your regular accounting system. Also, this fund feature within Tabs will maintain a fund balance on a matter-by-matter basis, but it is not capable of looking at it as a whole. You cannot look at your quote-unquote bank account and say, reconcile that bank account, or say, what is my balance in that bank account, and make sure that it matches what it should be. It's not designed for that. It's designed for really holding non-refundable retainers. That's what the funds or client funds feature within Tabs is meant to do. That's what we use it for, and we have a lot of clients for whom we have set it up specifically to manage those non-refundable client retainers. Now, how do you tell the difference? It's really quite simple. When you get money, what bank account does it go into? If somebody gives you $5,000 and it's a non-refundable retainer, you're going to put it into your operating account. It's possible to put it in your trust account, but it's not necessary. As long as you've written your fee agreement in such a way that it's clearly stated that this is not to be refunded, even if that much time is not used, then that money typically will go straight into your bank account, your regular operating bank account. If you put money into the trust account, the client funds feature is not really intended to handle that money. That's the distinction. So if you have, let's say, a family law practice, and you have a set price of $3,000 for a standard divorce, and with, of course, probably a fee agreement written in such a way that if you go over a certain amount of time or run into certain extenuating circumstances, then you would charge more. But that $3,000 then, when it's paid, goes into client funds. You can work against it, and it is something that would go straight into your bank account, and therefore the client funds feature is appropriate. If you have a client that's going to give you $5,000, but you may be refunding $1,000 of it, or you may be refunding some certain amount of money because you're only keeping this money because you anticipate that the work will be $5,000, and they may end up sending you more, they may end up getting a refund. That money needs to be put into trust. And when you work, the system can be set up to automatically pay the firm from the trust account, and that money will be transferred at that time. That's the distinction between client funds and trust accounting. Trust accounting is for managing money that needs to be kept in a separate bank account and which may be refundable at the end of the case. Also, if you get settlements, those are always supposed to go into trust accounts. You may get a $1 million settlement. You're going to put it into trust. You're going to write a check for $700,000 to the client. You're going to write a check to the firm to pay legal fees and perhaps costs advanced. That all happens in the trust account, and the money doesn't really hit your books until you make the payment to the firm to transfer that money, and then bam, it's in your books. Now, let's take a look at how that works. First off, one thing about the integration: when you have integrated trust accounting, you will be able to, in the Client Manager, click on the AR balance screen and see the exact balance of as many trust accounts as we have tied to this matter. Of course, it's unusual to have more than one money in more than one bank account, more than one trust bank account, but it has the ability to do that. So that's one way that we get the integration with Tabs. Another way that we get integration with Tabs is that when you write a check to the firm to pay for the legal fees that you have performed, that you've billed the client for, and we're going to go kind of simulate that really quickly here by putting firm in as the payee, and you'll notice that it comes up with firm, even though I've just typed FI. That means that it knows that the firm is set up with this address. It's a kind of a standard name that we use. When you make a payment from the trust account with that payee of firm, it automatically creates the corresponding payment entry in Tabs to reduce the client's balance by that much. So if you produce a bill for $3,000 and then you transfer the money from trust right here, it will automatically create the payment that will reduce the balance by $3,000, and therefore when you do actually print the bill, it'll come in with a zero balance. That's a second way that Trust integrates with Tabs, in that it does not require you to create both those transactions. You do it here, you write the check, you make the electronic transfer, whichever way you prefer, and doing this one transaction to lower the client's trust balance also creates the transaction on the billing side to reduce the amount that they owe you because it's being transferred from Trust. Another way that Trust integrates with Tabs is that if you print a statement, let's say for this guy here who we know has a trust balance because we see it here, if we print a statement for him, at the bottom you can have it set to integrate in one of two ways, detail or summary, or not at all. So at the bottom of the statement for a client that has money in trust, you can either elect not to show any trust information, to show the detail information, which is what's showing here, basically a header, an opening balance, any transactions, which there were none, and a closing trust balance. Or a summary, which really just says your trust account balance is $7,000. It doesn't give you the opening, it doesn't give you the detail, it just gives you what the closing balance in the trust account is at that level. So that's the three ways that trust accounting integrates with Tabs. One is informational, in that the client will be able to see, if you elect on a client-by-client or matter-by-matter basis, you can say that we want to show this information to the client. And as I said, it's on a matter-by-matter basis. So if you have some clients that you want to just show summary trust information, some clients that you just want to show no trust information, even though they have trust balances, and some clients that you want to show the detail to, you set that up on a matter-by-matter basis. In case you're curious, it's in here. And Leanne, are we taking bets on whether I get it on the first click? Let's see here. I think, okay, I didn't get it on the first click. I always have, there we go. I got it on the second click. I'm doing pretty good. I always have trouble deciding which screen something shows up on. Here it is. Trust integration can be either detail, summary, or none. So that's where you tell it that that information should be showing up on the statement. Another way that Trust integrates is with this also informational way of, in the Client Manager, being able to click on the AR button and see the trust balances here. And the other way that I showed you that Trust integrates with Tabs is that when you are actually writing the check to the firm, it knows who the firm is, and so you do not then have to turn around and go to Tabs and create the corresponding entry that would reduce their balance, that would show as a payment from Trust, if you will. Okay. Let's see. I think that is everything I wanted to cover from that standpoint, from an informational standpoint. Let's just take a quick look here at what you can do with trust accounting for those that my intent here is not to teach you everything there is to know about trust accounting, but for those that are considering it or maybe have it and aren't quite sure what the difference is, to give you an overview. But let me go into a little bit more detail. We do have all sorts of reports that are available. We do have the ability to reconcile, and I think that's over, okay, it's in here somewhere. There we go. We have the ability to reconcile just like we do in the general ledger, where you're reconciling your checking account and maybe multiple checking accounts. We do have the ability to set up multiple bank accounts, very simply by going in and defining the values for each of any number of bank accounts that might hold trust account information. We do have the ability to set up recurring payees. The firm is a good example of that, because that's somebody that you pay multiple times, but you could be paying court costs, so you'd have clerks of courts in here. There could be a lot of different things that you're paying directly out of trust. Now keep in mind, you can still advance money from your operating account and bill it, and then have the money paid to the firm at the end of the month or whenever you bill that client. You don't have to write the checks for this particular matter out of trust, but you can. Sometimes an attorney will decide, well, for this matter, when we pay the court costs, we're going to pay them directly out of the trust account. This trust transaction screen that we have here allows us to simply write a check or effect a deposit. So we end up with a deposit or a check, and you can also have a deposit that's a credit card deposit rather than a regular deposit, and you also have the ability to do EFTs and to void transactions. So money is either coming in or going out in a number of different ways. It can come in or go out. It can EFT or be a check going out. It can come in as an EFT or as a credit card payment. Another thing that is nice about the trust accounting system, especially for those of you that are using the credit card processing within Tabs, the people at SCI chose the processor that they use, TSYS, specifically because of their ability to handle trust deposits through credit card. Very important that your credit card processor be able to put the money directly into your trust account but take the fees for that transaction out of your operating account. And TSYS is able to do that. If you have a merchant account set up now, not through TSYS or through somebody that doesn't do that, what happens is that money comes into your operating account and then you very quickly move it into your trust account. And technically that is not right. Now, we have clients that we know are doing that, and we help them to put the workflow in place to make that happen. But technically, the Bar Association, especially in certain states, it frowns on that. They frown on that money ever being commingled into regular accounts. So even if you decide not to go with TSYS to do the credit card processing, we recommend that you choose a processor that's able, when you have credit card payments that go straight into trust, that's able to deposit the funds in your trust account but take the fees for the transaction out of your bank account. Very important whether you use TSYS or not. But what I'm getting at here is that you are able in our trust accounting system to use TSYS and therefore to have the trust account deposit and the transaction to charge the credit card all part of the same thing. And if you're using Tabs for credit card processing, you know what that's about. When you enter a payment, you say it's a credit card, it pops up with a separate screen where you put the credit card details, it processes the card, and then finishes the payment. So it's all part of one process. That same functionality is available here. Okay, that is my quick summary of how trust accounting works, how it differs from client funds, how it integrates with Tabs, why it's bad to integrate in any way except what I've demonstrated, because if you show that money in your books, in your general accounting system, any time before the firm is paid, the bar will frown upon that. I guess one thing I didn't say is that when you write that check to the firm, it automatically creates the payment entry in the billing system, and then if you have your billing software Tabs set to integrate with the AP and GL software, then that, of course, will create the corresponding entries in General Ledger that show that money in your books. So the only time and the first time that trust money ever shows up in your books is when you pay the firm. You make a transaction in trust, it automatically creates the payment in Tabs, it automatically then creates the corresponding entries in the General Ledger system to show that as income, and now it's in your books, and that's the only time it should be there. Leanne, do we have any questions?
There are no questions, Paul.
Awesome. That means that people are either sleeping or I have done a very good job of explaining this. I opt for the latter. The latter is the one I just said, right? Okay. Everybody have a good afternoon. If you do have questions, I'll give you the easy email address. I think the long one shows up on the recorded version, but for those of you who are attending live, the easy email address is paul@paulpurdue.com, and it's Purdue like the school, not the chicken, which is P-U-R-D-U-E for those non-sports fans out there, paul@paulpurdue.com. Or if you're looking for a challenge, you can also send an email to paul.purdue@attorneycomputersystems.com. So if you have any questions at all about trust accounting or anything I've covered here, please send me an email, and I'll answer and let you know what the answer is. Everybody have a good afternoon, good rest of the week. I guess that's the afternoon, and a good weekend. We'll see you next month. Thanks much. Bye-bye.